The country's economic team held a virtual briefing today to discuss plans on post-pandemic recovery. Let's get the latest from Shyla Francisco, is joining us via Zoom. Shyla, hi, good afternoon. What did the economic manager say about the country's recovery? Are we on track?
Maricel, economic managers are bullish on the growth prospects moving forward. They are all saying that the country is ready for a strong recovery. Earlier, during his speech, Finance Secretary Sonny Dominguez, for one, mentioned that the numbers are all in our favor in terms of GDP. For example, we are on track to reach the 4 to 5% target and to be back to pre-pandemic levels by 2022. Exports, imports, remittances, and net investments data are all improving, and with the declining cases, they expect a full recovery of the economy by the onset of the new year. They also expect revenue collection to go back to pre-pandemic level by next year, thereby resulting to declining budget deficit. Maricel?
Yes, Shyla, but President Duterte is just months away from the end of his term. What's the priority here in terms of sustaining economic recovery?
Maricel, NEDA Secretary Carl Chua says the priority is really for the reopening of the economy. Among the targets is the full resumption of face-to-face classes and the shift to alert level 1 by January 2022. They also target to have a full capacity for public transportation and the easing of travel restrictions. And in the remaining months of the Duterte administration, they are prioritizing some sectors, including modernizing governance through digital reforms and accelerating the rollout of infrastructure projects. In terms of legislation, they also hope to pursue some economic liberalization bills and complete the tax reform program. And in line with this, Finance Secretary Sonny Dominguez mentioned earlier that they are now working on crafting a transition plan for the next administration to handle the risks brought about by the COVID-19 pandemic. They say some of the priorities should include a roadmap for financial consolidation that will also need tax reform priority programs. Maricel?
Okay, having said that, Shyla, what are the sectors to watch out for and those that still need some boost?
Maricel, first off, NEDA Secretary Carl Chua mentioned that some of the sectors that they are looking out for have seen improvements, including airlines, fast food, and malls. And the investments that they need moving forward will need to be in the sectors of manufacturing, of renewable energy, research and development, and also in digital technology. Earlier, also, BSP Governor Benjamin Jokno says that he is encouraging investments in the digital space, particularly in the technologies and technical expertise of investors to help the country reach its economic growth faster and achieve the financial inclusion objectives of the country. Moving forward, among the priorities for the next administration should also include smarter infrastructure, climate change, innovation, and regional equity. Maricel?
Yes, but how about the foreign businesses, Shyla? Do they have some concerns, especially the international institutions, when it comes to the Philippine economic status?
Marcel, currently the forum is still ongoing, but what we caught on earlier was that the World Bank said that given the improvements, the Philippines is really poised to be a growth powerhouse in this pandemic, and the Philippines is likely to solidly rebound this year. Some of the concerns, however, is the U.S. inflation and its impact that will have on the Philippines. On the legislation front, both World Bank and American Chamber of Commerce cited the need to amend the Public Service Act, although there are bills, economic liberalization bills that are currently being passed on the Congress. They said the amendments to the Public Service Act creates much bigger opportunity for investors to come in. And on that note, the NEDA says that they are working with the Senate to amend some of the provisions in the Public Service Act.